Anthony Scaramucci of SkyBridge Capital is on the phone. Anthony, about a week and a half ago, on a similarly ugly day, not as bad though, you said you've got to just take a breath and stay out and watch and see what happens. Are you still in that stand on the sidelines mode, or are you looking at certain opportunities here?
No, we're on the sidelines, Liz. I just want to add a couple of things. I've been watching this great show for the last hour.
Thank you.
Basel III, Dodd-Frank, and the Volcker rule taking the liquidity out of the market, which is why it's bungee jumping between down 300 and now down only 180. The other point I want to mention is because we do track 1,200 hedge funds, some of the long-short hedge fund managers that had cut their exposure in January got super long at the beginning of this week, and they're cutting that exposure today. And we're watching that happen. We're watching that unwind today. And so it's just adding to the liquidity problem, plus the fact that there's a lot of uncertainty on the macroeconomic policy.
Oh, yeah. And by the way, I don't know if you heard Bill Gross, but I said, would you be shorting China here? And he said, well, I certainly wouldn't be going long China or investing in China. So even somebody like him, who's a known risk taker, when he sees a real opportunity, is saying, stay with plain vanilla. And he felt treasuries were a better place at the moment. And Chris Cordaro disagrees. He'd rather be in an Apple or a Ford. I kind of see both sides here, Anthony, but truly at 1.75% for a treasury yield versus 2+% for Apple, which would you choose? Well,
I would certainly take Apple over the treasury, but our positions are disclosed, Liz, so we are short China through Kyle Bass and through John Burbank at Passport. And so we do see that worsening, and that is also going to affect the banks. The yield curve is as flat as it's been since 2008. There's no way the banks are going to make money in that environment. I don't care what the Fed does, Liz. And so this is a period of uncertainty after having 6+ years of very buoyant markets, very low volatility. We're in a period of uncertainty, and all of us on Wall Street know that the 10,000-year flood, Liz, happens every 5 years on Wall Street. So this is a good time to be in the bunker.
I mentioned Chris Cordaro. He's still there, I believe. And Chris, you like Ford. I found it very interesting. The one thing in the aggregate that I noticed about all the Super Bowl commercials is that the auto industry was back in a big way. There were Hyundai commercials, Prius, the Prius bank robbery commercial. You had, I believe, Buick had a great commercial too. So I remember the year after the financial crisis, there were no auto industry commercials. Does this change anything? Because a lot of people have auto loans at the moment.
Well, Liz, I think you've got to look at autos, and there's a couple of positives here if you take the contrarian view. The lower price of gasoline means that trucks and SUV sales are really going through the roof and catching on fire. What the U.S. makes well is we make big vehicles well, and Ford is probably the best at it. So you've got to like them, especially at their valuation. Talk about dividend yields. Their dividend yield is 5%. The other part, too, is that the average consumer, because of low energy prices, has a lot of cash in their wallets. They're paying down their credit card bills. So there are positive signs to what's going on in the markets. There are positive attributes to low energy prices.